And I think what a lot of people don't realize is they see Bitcoin, the currency, and they don't really understand Bitcoin, the technology.
2018, I've had people come back and ask me over and over, where do you think Bitcoin will be? Bitcoin is a failed currency.
Yep.
It is a failed currency. It doesn't work as a currency.
Benjamin Quinlan is a prominent leader in global finance, leveraging his expertise in strategy and innovation to guide
businesses, governments, and startups,
navigating the complexities of the rapidly evolving fintech sector and building wealth in an uncertain future.
The one thing that I did find came up a lot in these conversations is I don't understand Bitcoin,
Right.
so I don't want to invest in it. How does it work?
Hong Kong, if you look at where the investment activity is so much funneling into the brokerage space,
Yeah.
right? People are active day traders. They don't want 8, 10%, 12% a year. They want 20% an afternoon.
Hey everybody, super excited to be back. Stefan Rust here again from Laguna Labs, the builders of TRUF.Network, Truflation, on top of the TRUF.Network. And I'm super excited to be back today and be here with Ben. Ben, here in Hong Kong, we're an entrepreneur from the traditional finance, but also consulting world, and migrated into a lot of fintech and crypto projects as well. So great to meet you, and thanks for coming and sharing your insights. But maybe first explain how you got into crypto, your background maybe a little bit, and what intrigued you to get into fintech and why.
Sure. So I started my career in traditional financial services, worked with the bulge bracket banks. I had an interesting time doing it. I realized at some stage in my career I was a bit of the problem. Every boss was a problem, and then that pointed back to me where I was the issue. And I figured I needed to just run my own business. I always liked the consulting side of things. I had mainly had financial services and institutions as clients. So in 2016, I set up my own business, Quinlan Associates. And the whole idea was, what frustrated me being from Hong Kong is, why is there no homegrown McKinsey, BCG, Oliver Wyman, Bain? Why is there no homegrown FS consultancy? So that was the ambition. I set up on the back of that. And then naturally, in the discussions I had with clients, there was such a push towards digital, fintech solutions. So it became a gravitation of where I really had to use my expertise and consult, build capabilities. So it steered much more towards that end of the consulting, what you would say, topic curve. And then I had a period of time where I joined the Fintech Association of Hong Kong, and I joined the board, and then I became the chairman of the Fintech Association in 2020. And then that catalyzed the next round of engagement and discussions with fintechs in Hong Kong, of which crypto companies, be it exchanges, funds, you name it, we're part of that ecosystem. So it was very interesting to, over time, get working with many of these very innovative firms.
And so when you said there were, I'm intrigued to find out why there were no real homegrown sort of consulting firms in Asia, right? Why, given that it's such a big market, so many different people, and so many different opportunities, right? To leapfrog straight into new technologies without having to rely on COBOL software programmers, from 1950s, you can actually leapfrog into new age programming capabilities. Why did you not see, what was your finding there?
Two main things. The first one is I generally found that the entrepreneurialism, the innovation locally to create what I would call these advisory firms was always something that I think was put on the back burner for a lot of people. The local demographic in terms of clientele, they really love the big brands, the big international companies. And I thought, well, how do you create a local brand that actually fights it out with that level of company? So that was really, really important to try and understand. And it's not just consulting. I mean, look at Hong Kong as a financial services epicenter, as one of these places that's a major professional services hub. hub. When you look at, does it have a homegrown law firm? Does it have a homegrown consultancy? Does it have a homegrown accounting firm? You realize all these professional services firms, they're all imports. So I wanted to be that crazy guy to do it. And instead of just leveraging a brand from New York or London, it was, no, let's create a truly Hong Kong DNA brand that the city can be proud of, but that we can actually export to the rest of the world. So that was something that, was really behind the vision. The other side of it is a bit more blunt, but it's a mindset around, does the Asian market pay for just advice? Not so much. Yeah. They pay a lot for delivery, but I think when you compare it to the Western mindset around how to engage with consultants, particularly people that do strategy, there's just a different price point and value add that each client base sees from working with consultants. Yeah. And it's not to say that clients here don't value it, it's just maybe they have a different sticker price.
I thought what you chose to do with focusing on the fintech sector, which was an area where Asia actually has a lot of strength in that area. Why? Maths, a lot of understanding of finances, interest in finance, interest in gambling, maybe speculation, maybe we should call it, not gambling.
Sure.
So it was actually a great opportunity and less infrastructure, right? So a lot of new capabilities and new opportunities to build new types of infrastructure. And how's that been going? And how do you feel there that, the changes that take place there?
Very positive. I think Asia in particular, the other structural dynamic is there is this big underbanked, unbanked population that catalyzed this growth of, buy now, pay later firms, virtual banks, and then crypto coming into the foray as well. I think the infrastructure developments around this space have been absolutely rapid and phenomenal. You've seen the launch of, for example, just in virtual banks, 46, 47 virtual banks in the region. Yep. And, they're all catering to a different segment of the market that traditional banks have long ignored or left behind. So it's nice to see that momentum continue. And then crypto, you mentioned this whole gambling culture. I don't think there's any problem with the use of that word. Go to Macau, go to any casino in the world. It's a lot of locals trying to beat the math of the house. It actually plays into, just to touch on that point, that's why you've never seen really this growth of the ETF passive investment story in a market like Hong Kong. Hong Kong, if you look at where the investment activity is so much funneling into the brokerage space, right? People are active day traders. They don't want 8, 10%, 12% a year. They want 20% an afternoon. So it's a very different mindset around that propensity to take on risk and to speculate. And, that's played to the favor of many different industries in FS here, like the Futus and so on. They're exploding. And then other robo-advisors, for example, have had a much, much slower start in terms of their growth trajectory in Asia vis-a-vis those brokers.
It was funny, I was at a dinner the other night and I was sitting next to somebody in a consultant from a big bulge bracket firm, working for an insurance company, right? Okay. And so I was asking, they're struggling to get into the youth market. They pay 15% sales commission. I mean, I don't know any industry that pays you that high, a commission on sales. 15%, that's huge. Number one, so they're really struggling. So that tells me that, right? They need to really incentivize salespeople to really push products hard into the market, number one. Number two, what I felt was youth. Who in the youth market is looking for a life insurance product that's going to generate 1 to 5% annual returns? I mean, it's just, but those are people that want to save. It's like, but who in the young era? And so you ask them and you dig deeper and deeper and deeper, they found that actually there's no hope in the youth. So why would they even invest in an insurance product that doesn't even help them with their hope? Yep. However, in fintech, in 20% and in 20% returns, or in crypto even, where you can get 1,000% returns, you're seeing very different averages.
Yes. Well, insurance is interesting. So if you take the Hong Kong insurance market, I think if you look at the total gross written premium pool, about 11, 12% of that on average is paid away in commissions to agents, brokers, and so on. But the numbers are even more staggering. So let's take like a savings plan product. You would be baffled to know that if you buy one of these savings plan products, between 80 to 90% of that first year's premium is paid away in a commission to the broker. That's how high it is. But this is why we have 116,000 agents in Hong Kong. 1 in every 32 people with a job is an insurance agent. That's a little heavy. So Hong Kong is a heavily intermediated market.
And is that full-time agents?
No,
or are
those agents,
sort of a bit of blend of...
Exactly. Well, you do have the brokers that are full-time, and then you have the bank assurance tied agents as well. But there's a lot of freelance agents, that don't necessarily work full-time, work on a commission basis. But those commissions are very, very, very substantial. Yeah. Now, there's a pro and con to that. You can argue that, insurance is a product that's sold, not bought. Yeah. I get that. And I think for the younger generation, if you look at what insurance is fundamentally designed to do, it's a protection product. So you're trying to protect your wealth that you don't have. Yeah. Usually it's something that's much more geared towards an old generation. And if you look at where most of the money is coming from in a market like Hong Kong, it's this higher net worth or mainland Chinese visitors. Yeah. It's people that ultimately want to protect their assets, avoid all the issues with probate, particularly larger families, and their mega policies here. Right?
Interesting. So one of the things that I've always found, crypto and blockchain actually is we've got this whole narrative around real world assets, right? And moving that onto and it started off with lending, right? So lending has moved on chain, and we're leveraging the capabilities that the blockchain provide for lending services. Insurance is one area that obviously should actually, if it could be bought, that actually people would leverage that, and you could get a far more attractive sort of premium set for that because it's shared amongst the distributor, and there could be pools that could generate wealth. Do you see any movement in that area, or are you seeing innovation take place or incubating in that area?
I would say insurance is one of the slowest to innovate among all the FS industries. Yeah. And if you look in Hong Kong, even something like digital insurance distribution is woefully underdeveloped here. Yeah. So you have, I think, 4 virtual insurers in Hong Kong, the likes of Bowtie, 1 Degree, and so on. Yeah. And again, the purpose there is, why don't we offer direct-to-consumer insurance products? Let's bypass the agent or the broker. Let's avoid those big commission payaways and deliver better value, like for customer, on a comparable product. Yeah. And we've run the numbers. I would say if you look at like-for-like insurance product on digital distribution platforms here, they're probably selling between 20 to 40% cheaper than the incumbent insurers. But again, the challenge is, how do you get people to buy these products if there is just a digital interface to having a discussion with them? Because a lot of them will require more questions. They'll want to understand how these work around trigger events. What are the kind of things that will influence a payout or their premiums and future? So insurance is a slightly more complex product, which requires a bit more hand-holding, but I wouldn't say necessarily to the extent that we see here right now. For your other question, is blockchain being leveraged in the insurance industry? Not really, from what I can see. It's really, there's not much going on right now.
Interesting. Yeah, I mean, I would have thought it's prone for innovation, and there's a lot of room to innovate in that area. But the other thing that we are seeing, there was just... a lot of people see that 2025, we've just entered in, we're at day 6 in this new year, that 2025 is going to be a year for stablecoins, right? And the growth of stablecoins. And I know you're doing some work in the stablecoin area, working with bigger institutions and trying to optimize transfer of funds, settlements, rapid settlements that actually can go a lot faster. Yep. How do you see that sort of rolling out? And there seems to be a lot of innovation in that area from both traditional finance, institutions, as well as obviously in the DeFi space.
Yes, that's right. So stablecoins, you've seen a lot of emphasis around getting regulatory regimes in place in the region to support new issuers. And certain jurisdictions have moved to sandbox phases where they're actually testing and piloting these new stablecoin projects. I think regulated stablecoins are fascinating because what it is it's basically providing regulatory legitimacy to an asset class that can move it from what is a digital currency to more something that's akin to legal tender. So at this particular point in time, we look at most of the stablecoins around the world, about 99.5% are denominated in US dollars.
Yeah,
exactly.
Totally.
And they're used as basically to provide that facilitation on-off ramping to Web3 investments. But when you look at what the purpose of a stablecoin should be, the big breakdown and link is then back to the traditional financial world, right? How do you actually use these stablecoins in real daily activities? Then you ask, okay, do merchants accept them? So our research says about 30,000 merchants globally accept crypto-based payments, which will include stablecoins. That's very minuscule, to be honest. The proportion of online e-commerce transactions conducted in crypto or crypto-based payments, single digits, right? So very, very low. And then you ask, well, why aren't merchants really accepting this at this point? Because it's not fundamentally regulated. And I think that the more we move to a situation where at least the merchant can say, oh, this asset class is regulated, it's protected, I can actually use it in my daily activities. Not only can I accept it as a currency, but then I can pay it out. I can do my payroll with it. I can pay my suppliers with it. That's where you're going to start to see a lot more legitimacy. And I'm quite excited about the future of stablecoins as this new asset class, particularly as it pertains to settlement, as you mentioned. Yeah.
So I was the CEO of Bitcoin.com, and during that period, we focused heavily on peer-to-peer electronic cash and try to get payments as a means to drive velocity associated with cryptocurrencies. And in those days, we were really looking at Bitcoin, Bitcoin Cash, Ethereum. Those were the top currencies. How do we drive adoption? We managed to secure about 500,000 merchants that would accept crypto. I mean, you could go to a Toyota car dealer in Lugano in Switzerland. You could go to a restaurant in Ljubljana. You could go to the grocery stores in Venezuela. So around the world, we sort of built out relationships to establish payment capabilities and settlement capabilities. Huge advantages. Instant settlement. There's no pullback. It's immutable, right? So ultimately you get it. And fees were minimal, right? And so compared to credit cards, much more attractive. However, you at that same time, you saw, and which is coming to where I wanted to lead with this, is really around regulatory sets, right? There was this initiative by Facebook. They wanted to launch their Libra coin. And whilst they legally got all buy-in everywhere, all their partners were told that if you actually go, we can't stop you legally, but from a regulation perspective, we tried to ban you from doing it because you will have other problems with us as a regulator going forward. How do you see that sort of playing out in terms of, do regulators really help on the one hand? And, maybe I'll just leave it at that question.
Well, they can help and they can hinder. So regulation is often a double-edged sword. I think, it depends on the stakeholder in question. So if you go to every means of crypto possible, the whole idea for the mass market is they wanted to avoid regulation like the plague. That's the whole point of it. So the exchanges, for example, have been playing the biggest regulatory arbitrage ever and moving around to jurisdictions that are much more crypto friendly. I think jurisdictions that have tried to implement some more regulatory prudence or stringency around it have seen the outflow of business from their jurisdiction. But then that goes to the question, all right, does that set you up more for an institutional crypto play? Potentially. Like there is definitely an argument there. But crypto has never really been about the institutions at this point. Crypto has very much been about the retail market. Goes back to your very first point around gambling. I look at people and why they get in, and some of the rationales that crypto enthusiasts give me is just want to make $1 million tonight. So the logic that goes behind it can be quite defunct, but it's not the point. I mean, if they can ride a bull wave and make some money out of it, sure. But when you get an institutional investor, let's say, would a BlackRock ever invest in a Doge or a meme coin? There is a fiduciary responsibility. So it becomes really hard as a fiduciary to justify why you're making investments with that attached to absolutely zero ability to explain fundamentals to end investors. So it becomes very challenging in that regard. That's why you've seen these ETF layers and wrappers really be focused on the larger cryptocurrencies and things with a lot more legitimacy.
Yeah, it was funny because, when you hear in certain podcasts about a certain meme coin, taking off because there's so much energy in this in this currency. It's like, but how long does that energy last? What's the liquidity? What's the depth? Right?
Yes.
So there's very little fundamental insight into it, but there's a lot of momentum and engagement and community involvement around it, which makes it interesting, but not at an institutional scale.
I agree, and I was having a very frank discussion with my friends, saying, "Are they stupid or are we stupid?" Right?
Yeah.
Are we stupid that we didn't invest in some of this stuff? Because it goes crazy. If you ride the wave and you can get out at the right time, you're doing very well. But then when you see this mean reversion back to so many of these flop projects, things that add no value, things that are literally designed to be a joke, that are worth far more than companies that have legitimate business interests, cash flow streams, it does beg, call into question, is this new mindset, this new investor base, are they fundamentally different? Are they looking for something very different? Do they even care about all these fundamentals? Yeah. I actually had one of the most interesting conversations with a crypto entrepreneur. This crypto entrepreneur owns a couple of businesses, but one of them is a very credible cash flow generating business, a couple hundred employees. The other one is just a token. Yeah. The business's token doesn't really do anything. It's worth more than the very legitimate business. Yeah. And we were discussing, maybe there is some interesting observation to be made here, which is the fact that the token isn't tied to a business with fundamentals is highly beneficial to its future trajectory because it's not anchored down by a PE ratio or price to sales ratio. It just sits in the land of hope. Yeah. And the land of hope, it's infinite. Yeah. It's limitless. Definitely. And just when you see some of these returns, I think, one of my friends, they're literally billionaires this year. They went from almost nothing to, billionaires. So congratulations to them. Yeah. It's all well and good. But I do worry for this ecosystem because for every overnight millionaire and billionaire, there's a lot of people losing their life savings.
Yeah, you have fart coin is hot air.
I didn't hear this.
It goes up all the time.
Right. There is an actual fart coin.
There is a coin called fart coin.
Wow. Okay. So okay.
But yeah, on the flip side, my argument in a lot of these cases is that it's venture capital.
Sure.
And it's allowing the retail market to participate in venture capital. It is and should emphasize do your own research in venture capital because ultimately it's a high risk game. And venture capital, what you don't hear or we don't hear about is 10 to 1, right? So that's the ratio. You invest in 10 businesses and one really is hopefully a home run. Not always, but that's sort of a ratio that the industry talks about. So it's a tough and hard business. And so now all of a sudden that's opened up for the retail. So retail can go into venture capital, and of the meme coins, Shiba makes it, right? Pengu makes it, right? You have Doge makes it, but there are 30, 40, 50, hundreds that have not made it as a result of those making it. But you have Pepe, you have Base, you have Fartcoin. Will Fartcoin become a coin that ultimately becomes a currency? And could those, given the wide adoption base of Doge, could Doge, and by the way, I was in Switzerland and I was up in the Swiss Alps and there was a hotel that was Doge accepted here. So I went and stayed in that hotel and paid in Dogecoins. So could Doge become the new currencies? Could these meme coins, mimetic assets, become currencies and be tradable per se?
Yeah, so a couple of observations. I do take your point on the kind of the analogy with VC. Yeah. The difference is it's definitely not 1 in 10 in terms of that success rate. The other side is the sophistication of these retail investors and allowing them to plow so much money into fluff. But you can't stop people from doing what they want to do at the end of the day. But I think that the final thing is on the end side of it, at least in the VC ecosystem, you are seeing some fundamentally groundbreaking businesses. I came here in an Uber today. Yeah. That was backed by a VC, right? But did I do something with a lot of the meme coins that exist or that have existed over time? Now, I take your point that there are certain merchants that are opening up saying we accept these crypto payments here, but I do ask this question. This is something maybe you can help shed some light on. Most of these merchants, when they're accepting it, they'll do a conversion instantly to fiat. So it's kind of like me saying, I pay for things in dining tables, because I can go sell the dining table and then give you cash. That's my form of exchange. So, of course, there's a totally different liquidity profile and whatnot. I'm being a bit cheeky here. But the reality is when you look at what these merchants are accepting and willing to put on their books and hold on their balance sheets, very little of it is actually crypto.
Yeah, I mean, you have a very tiny portion of their customer base actually pay in crypto.
Yeah.
That's what our finding was.
Yeah.
However, what we found was the owner of the actual merchant wanted to keep that crypto asset.
Right.
Especially if it was in Bitcoin Cash, and in Ethereum. But they wanted to hold those as assets, and that would be their savings. And they would try not to sell those. So that was the big finding that we made.
Yeah.
We had a much bigger problem was users didn't want to pay. Over time, they realized that they were not spending the Bitcoin and Ethereum faster than they were having it come in.
Okay.
And as a result, they didn't want to spend it because the price was moving up faster than they could have the velocity of that currency.
Yeah.
And then the gas fees started getting expensive, and then et cetera, et cetera. So those were all, and that's where stablecoins, then all of a sudden, stablecoins provided a beautiful product market fit.
I agree. And this is why I always maintain and will maintain that Bitcoin is a failed currency.
Yeah.
It is a failed currency. It doesn't work as a currency. If I know something is going to go through the roof or have that much volatility, I'm not going to spend it. Yeah. But I think stablecoins really are that bridge. They are solving that fundamental problem in that gap between Web 2 and Web 3 worlds.
And then US dollar, obviously, as you mentioned earlier, right? 99.9% maybe is in US dollar. So the world has a global currency per se, right?
Sure.
Doesn't stablecoins actually help strengthen the US dollar as a such, because it's a global currency? Everybody thinks in US dollar in crypto land anyway, or translates it to US dollar. And so all of a sudden you have a regulator trying to force it in Europe. They're trying to force everybody to have it euro denominated and euro pairings, right? So doesn't that help strengthen the US dollar and as such?
Well, it's the lingua franca of business and of trade, yes, but I do believe that because you are seeing this push towards creating local stablecoin regulatory regimes and locally denominated stablecoins that will benefit the local jurisdictions significantly. Because the fact is, US dollar can be used in the US and certain other countries around the world. But if you're going to get to the heart of what the stablecoin should be designed to do, it's that bridge back to the real economy. And if I'm going to go to Australia, for example, and say, no matter what in the future, can I start paying things denominated in USD with an Aussie merchant? I think they would be much more inclined to say, just pay me in an Aussie dollar stable coin that actually is worth the Aussie dollar, because that's how I manage my payroll, that's how I manage my vendors. Like, it's all in that matching between your receivables and your payables.
Which, to me, Hong Kong is a great example, right? You brought that up. And to me, I was just in Argentina. We launched the Argentinian inflation index to applaud Milei's work and what he's done in Argentina and bringing down inflation. Done a super job. And trying to do that with bringing that back to Hong Kong is. There's been talk about Argentina dollarizing the peso, right, or the currency. But what I think Hong Kong did was much more ingenious, right? They created the Hong Kong dollar stablecoin pegged to the US dollar. It is a stablecoin. It's been pegged to the dollar for, I don't know how many years. It's 7.77, and they've held it for 30, 40 years. So there's a lot of learnings that Hong Kong actually created Hong Kong dollar, so people can think in Hong Kong dollar, but it's actually a stable coin to the US dollar.
Yeah, I mean, it's a peg currency. We're going to get in semantics around the definition of stable coins. But I do take your point. I think when it comes to global commerce, trade, and so on, the fact that Hong Kong does have the peg to the US dollar is highly beneficial. I mean, Hong Kong is one of the top 10 trading ports or geographies or markets in the whole world, right? Both by imports and exports. So I think it has been highly beneficial to it. But I do believe as well that that's not then coming back into the local ecosystem with local merchants. It goes back to the point I'm making around a local HKD stablecoin. Would still be beneficial in terms of driving activity here. I imagine this idea of if I go out on my e-wallet as my Octopus or my PayMe or whatever it is, and I can start to pay for things using a Hong Kong dollar stablecoin, it's all instantly settled. As a merchant, I don't have to wait a few business days in order to withdraw my money back into my account. Bang, bang, bang. It's going to start to change the way that this ecosystem works if that stablecoin can permeate in the market a lot more. I think that would be quite interesting.
And what do you view on traditional stablecoins, right? You've got like Tether that has an amazing amount of profit, it's hugely efficient, capital efficient in terms of number of employees that they have for the amount of currency that they maintain in circulation.
Phenomenal.
It's a phenomenal phenomenally profitable business.
Yes.
And so as such, won't traditional industries want to adopt that kind of a business model without that sort of huge overhead and sort of try and enter into this? And you're seeing new sort of yield-bearing stablecoins come into the market to try and grow their presence with yield, ultimately.
I think a lot see this as, well, the evidence is there that these work, but it goes to what you said, ecosystems, communities. You really have to build that in order for any degree of scale to come on the reserve for these stable coins. But I also think they will face regulatory pressure in some jurisdictions as to whether their stable coin is allowed to circulate, be spent or used in that particular market, and they will find their doors being locked. So what would they do? They will probably play, their window of regulatory arbitrage will start to narrow, and they will probably look to get licensed in certain jurisdictions where they want to continue having that stablecoin operating. But it's very hard to dislodge that market dominance. It really is. And on your point of yield bearing, I think, regulators, depending on which jurisdiction, but there seems to be quite a lot of alignment that, the interest on the reserve cannot be paid out to end users as interest as well, right? So there can be discounts or rewards or cashbacks, but like for like interest to interest, I think a lot of regulators are closing their door to that idea.
I mean, there's definitely a lot of desire to maintain the control over monetary policy, right? And I think if you look at Tether, a lot of crypto industry look to Tether as how much are they minting versus or burning in terms of market success and liquidity growth in the crypto industry, at least. And so ultimately they become more important than the Federal Reserve in the crypto industry, right? And I suppose that becomes a bit of a tussle.
It does, and I think it's also interesting when you see the US government also as one of the major holders of crypto, of Bitcoin, right? It's sending a signal, because Bitcoin, by its fundamental design, was there to challenge the US dollar as a form of currency. It was saying, well, if you can just print an infinite amount of USDs, then what is this worth? And when the US government is actually putting its own reserves behind buying into a currency that technically at its core is supposed to challenge the USD, it is quite interesting. I'm very keen to see how this all plays out.
Yeah, and there are interesting movements there, right? If you look at some of the proposals that are set forward or put forward for the US government to engage and build out the Bitcoin as a reserve currency for the US dollar. It's mark the gold that we have to market and use that mark to market profit to buy Bitcoin, which is actually a very smart way of actually accumulating new assets or new reserve to back a currency that isn't really
correct. And it plays into the narrative about Bitcoin being the digital gold.
Exactly.
It's the closest analogy I could find. I mean, we've done tons of research. We published a big flagship paper in 2018 on this. We were actually one of the most accurate forecasters in the world of where the crypto market was going to go that year. And we did forecast a recovery and a rebound. No one saw that part. They just said, oh, you didn't pick up the rebound. We did. But the reality is this whole, I think the thing that just drives me sometimes a little bit crazy with this industry is we got that core very right in 2018. I've had people come back and ask me over and over, where do you think Bitcoin will be and where do you think Bitcoin? And the fact is, it's just based on whatever you think it'll be worth. Like, it's as simple as that. That is the core fundamental. And as long as enough people believe that this will be a store of value for them, then it will play into that narrative. It will naturally play out that way. And
I think that's sort of addresses a lot of the points that you brought up in what I'm sort of reading from what you've the conversation that we've been having is really trust, right? There's a lot of trust in inherent currencies, in legacy, the Lindy effect across a lot of these assets, and the Hong Kong dollar, the Aussie dollar, and the US dollar has a lot of trust in it, despite the fact that it's got $37 trillion in debt,
right,
etc. Right,
just a bit.
But there is there's liquidity there. So I think it's also trust and liquidity maybe comes into the mix, which actually I didn't think about. But liquidity is really an important component to
Extremely.
it. Right?
It's also old money versus new money, right?
Yeah.
So the old money is still resting on the old TradFi systems. They don't see a need to potentially move towards all of this. But the new money and this new breed, this new generation, they're very much embracing this decentralized, anti-government, approach, and something where they have much more autonomy, control over their own finances and their own future. Now, the extent to which DAOs are DAOs and the extent to which, things are really decentralized, if you look under the kimono, sometimes you will scratch your head and be like, that's not really decentralized whatsoever. But the reality is, I think this movement is very clear in terms of where the next gen is focusing.
Yeah, the direction's very clear.
It's very clear.
To me, sort of talking about old money, new money, family offices generally tend to represent slightly more older money.
Yes.
And we work with with Truflation and selling the data and the prediction around where inflation's going in different markets. We work a lot with family offices as well as hedge funds and other areas. But family offices are generally very different across different countries. And in Asia, I found, having met a number of family offices during this trip here, it's very much, I don't understand it. I don't understand crypto, Bitcoin. I don't want to go there. For me, cash is king. Cash earns 4%. I'm happy with 4%. But that's, of course, if you're sitting on billions already,
correct.
4% is okay,
it's
right?
Great.
Because it still pays me my whatever lifestyle that I want to live in.
Exactly. But well, it was like the most, it's just to pick up on that. I had a conversation with one of the CEOs of a private bank, and he goes, Ben, diversification is something you do when you're a billionaire, right? But every single client that we have here has made their fortunes on one thing. That's it. It's one business, one investment, something went right. That's where they became multimillionaires, right? But when you get in the diversification story, that's later. You don't have that. You don't grow people into billionaires or multimillionaires by giving them a well-diversified portfolio of ETFs, right? So it was just quite comical.
But the one thing that I did find came up a lot in these conversations is, we talked about trust and liquidity, but the thing is, more importantly, is I don't understand Bitcoin, so I don't want to invest in it. How does it work? And then on the flip side, you go back and ask, well, how does the traditional finance system work? They don't know that either. The government just prints money, it's backed by gold. They still think it's backed by gold, even though we've gone away of the gold-backed currencies and stuff. So it's still, do we really need to understand how these work? Does the retail investor or does the investor need to really understand how this works?
I think it helps, but then you're trying to sometimes grasp at straws and clutch at thin air. It's like, how do you try and understand? Like, I would love to see this conversation with people doing some technical analysis on Dogecoin or interlaying their thoughts and expertise. It's going to go really nowhere. It's not about that. It's about what your conviction is behind it. Do you think this is going to be an asset class that will hold value and have value in future? Is there enough of a community to pump this up and create that momentum? That's where the value comes in. That's really it. But I do agree, the understanding here, and this has been one of the major inhibitors towards DLT adoption in Asia. within traditional financial institutions there is a lack of understanding of this particular technology and a lack of understanding, let's say, of the asset class. But there is also that fiduciary responsibility. And I think when you take a market like Hong Kong has always had a much more prudent approach in terms of the way they regulate. They are an established global financial center, so they don't want to put that at risk. I think when you compare it to the Bahamas, like, yeah, sure. I mean, you got nothing to lose. Go for it, right? You can be as friendly as you want as a jurisdiction. But then you got jurisdictions, very interesting, like the UAE, which are really, doing this full out. And they want to be a global crypto and Web3 hub. And I think they're doing a brilliant job. And they're learning as they go, right? They have the regulators, they have VAR, they have HGM, they have all of these institutions, but it doesn't feel as prescriptive and overbearing, so to speak. It feels like we're here to trial and test and innovate, and the regulator is here to support and learn as we go along too. That environment seems to have attracted a huge amount of Web3 capital and entrepreneurs, and I have a lot of friends and clients and business contacts that are now based there. So.
And those are both from the startup environment to mid-tier companies to actually traditional big,
giants,
financial oligarchy, right?
Yes.
And so to me, but that's also a way that if we look at the financial services industry, it started off, simple banks that we were depositing money and we were withdrawing money, right? And then it's sort of evolved and experimentation over time. It's just got legacy there and background, which I think is really attractive. And to me, attracting talent is really important in this sector, right? And I think what the UAE has done a fantastic job at is attracting that talent with a lot of incentives and a friendly regulatory framework, which a lot of other jurisdictions have had very adverse relationships with crypto and DLT technologies. But I think the really interesting element, right? The US and Trump's gone out. We've got to make Bitcoin American, right? And I think what a lot of people don't realize is they see Bitcoin, the currency, and they don't really understand Bitcoin, the technology. And I think you brought it up as DLT, right? Distributed ledger technology. What is that? It's basically a decentralized database where everybody maintains that database. And I think a lot of people don't understand the power to actually maintain and monitor data that's on that database, maintained by a community. And I think that's really where the technology actually can really shine.
There's huge potential in what the technology can do. Even when you look at traditional financial services, the whole move for digital securities, real world assets at this point, the clearing, the settlement layers, everything. Like it's nothing new. We've written about this a long time ago. We've advised on it. We've worked with companies that have issued this stuff. So I get all of that, but it is an area where financial institutions are really, really keen to push. But the understanding is challenging. So there's three core problems that I see in terms of getting more adoption happening behind this. Business-wise, it's very rare that you find or face off against an institution with a very clear DLT strategy as a whole. The governance that sits behind it, the buy-in of the board, the business case. So this can get a little bit wishy-washy even at the first conversation at the top of the house. Then you go into all the issues around the technology. It doesn't integrate with our legacy technology. We've got major challenges and questions around the throughput and scalability of these solutions. And then, of course, the final one is really around risk and compliance, which is we're not 100% sure if we can or should, and there's too many conversations that we're going to need to have with regulators. Maybe we just continue business as usual. Now, some organizations have very much embraced this. You've seen JP Morgan Coin, ANZ Coin. You've seen HSBC with their gold token product. You've seen quite a few traditional financial institutions embrace it. You see BlackRock with its ETF.
ETFs.
Right. So companies are starting to understand where to drive the value in this. And as long as the customer wants it, then sure, why not? We'll provide it.
And that's to me the one is, we've RWA has been a big narrative in crypto, real world assets, not risk weighted assets.
Yes, yeah. I'm frustrated by the term as well in my generation. Yeah.
But I think one area that I see as very challenging, and I think maybe the examples you just mentioned, right, BlackRock and HSBC and JP Morgan with their coin is set aside, is how do businesses, in your experience, weigh off the, IT budgets per se and the focus for a year? If I've got AI, I've got to focus on. I've got cybersecurity, I got to worry about that. I got my existing SaaS businesses that I got to maintain and integrate. And then I got this thing called blockchain and cryptocurrency. It's like, where do I, and how is that weighted off against each other? And I mean, my experience and interface is it's really hard to get blockchain and crypto as a priority on that list against all those other
vis-a-vis things that are in the world of a TradFi institution a lot more low-hanging fruit, then yes, I would say that it becomes much harder to prioritize investments and budgets in these new technologies. I mean, but like even just taking the most basic of technology, sometimes I do shudder at just how analog certain financial institutions are in Asia. It baffles me. My jaw drops when you see the movement, you see where everyone's going. Even in the brokerage market, for example, we wrote a report a while back called Going for Broke. And we said, if you are one of those retail brokers that picks up a telephone and you charge your end investor 40 bips to trade an Apple stock, you're going to be out of business in the coming years, period. So many still will not change. And then it's just, you watch the sunset industry. Exactly. Yeah. And we've seen this happen so many times before. We've seen it with digital cameras. We've seen it with entertainment. We've seen it with streaming music. So, like, do you want to get with the times? Do you want to, or do you want to protect what's there? Challenge with most of these institutions. And given I sat in them as well, management's not there for life. C-suite boards and so on. Every single traditional financial institution has to hit very tangible, aspirational KPIs in the short term. Quarters. They operate by quarters. Digital technology, transformation, revamps take years. And when those results ultimately come through, will that executive be there when it's around? So the alignment of incentives is really, really important. And it all starts with that particular business case. And I have been in those meetings with CEOs, and they can see the numbers, they get it, but they won't be there. So it's not on their agenda at that point.
Yeah, there's we have a product that's built on top of the TRUF.Network using our data sets called index.fun. And index.fun allows anybody to create indexes. And one of the indexes that they created was founder-led companies, right? So which publicly listed companies are founder-led, and how are they performing against the S&P 500? Interesting. And then Peter Levels did another one, which is the deadlift index. I don't know if you've heard of that one. It's all the CEOs that go to the gym and how they perform. Nice. So everybody's sort of trying to come up with new types of indexes. But the founder-led one is an interesting one, because the founders, if you look at how they've been driving innovation and how they have pushed and lent into, in the case of Facebook, into Libra, into trying to push a stablecoin out there, or a blockchain. You look at now they're doing it to AI. You've got Elon Musk pushing into AI. How do you see that? And in the companies where there's CEOs that have sort of taken on the new leadership, have been a bit on the back foot to a lot of these new innovations. Well, do you see a difference in your experience between? Yeah, okay, there
Founders
you go.
Get it. Founders get it. We build things, we screw up, we make mistakes, we learn, we pivot, that's the journey. I mean, like when you're in a traditional financial institution, you think I could innovate when I was at an investment bank and then make mistakes? I mean, I would be fired. It's as simple as that. The whole idea is to minimize risk, minimize mistakes. So this is why when you look at a traditional financial institution, the way that they've traditionally innovated is create an innovation lab. innovation lab. So what's an innovation lab? There's a room. It's got a foosball table. It's got some inspirational posters hanging up. There's a PlayStation in the corner, and there's, you know, two guys with ripped jeans who used to work at Microsoft and Google in there, and they're talking to the businesses about all the latest technology. They're about 7 steps removed from the business heads that actually need to make these decisions. So this is how innovation has traditionally happened in NFIs. And a lot of these traditional FIs, they engage in these proof of concept ideas, and they'll experiment. But what really bothers me is this absolute cliff fall off in adoption from going from a POC to actually implementing a solution. If I could look at that ratio, implementation to POC, I think it's probably 1 to 100, 1 to 1,000. You know, and I think, you know, you don't have that DNA inculcated in traditional financial institutions for a lot of the time to create the innovation needed to really change fast enough. And this is why you see so many of these young disruptors with that mindset to move quick and that hunger do extremely well. But sometimes if a traditional financial institution has enough of a moat, they can hold out for a while.
Yeah, I mean, to me, it's been interesting to also, particularly in the tech industry, just to watch Microsoft and Google, for example, how they actually have really lent into this with, you know, the CEOs that have come and grown up from within. And they have innovated in their organizations. They just haven't brought it to shine as they have in the last couple of months, particularly in the case of Google, and in the last year in the case of Microsoft specifically. So there are definitely way-offs, and it's not always sure that it's going to only be founder-led.
I agree. I agree. I think, you know, you can always bring in the right kind of DNA to an organization that has the mindset for change. Change is hard. We all know it. I mean, anyone that says change is easy is lying. It's really tough. Even me, I need to change some things. You've got to change your habits, mindsets, behaviors, ways of doing things. We're creatures of habit. All human beings are. So, and when you create an organizational structure with KPIs, governance, incentives that don't actually nurture that change process, then it becomes very easy to get stuck in a holding pattern. So I am all for these firms actually pushing aggressively to change, to build new products, to bring them to market. But I think that speed of innovation, that speed of disruption, it was like you go through this famous example. So it took from market peak to bankruptcy in these cases. Kodak was about 16, 17 years. Blockbuster was about 9 years. And then BlackBerry was somewhat shorter than that. And then you got MySpace, which was about 3 years. So you look at the speed by which these organizations ended up being global powerhouses to becoming economically irrelevant. The speed of technological disruption is so fast now. So you either need to get on board or you're out. It's really that simple.
On that note, what's your view on Visa, MasterCard, American Express versus USDC, USDT, or governmental stablecoins on blockchain rails?
So I'm not very bullish on retail CBDCs.
Okay.
I just don't see an actual use case. I don't see what they can deliver beyond the current faster payment system or instant payment infrastructure that a lot of governments have built locally. There may be some utility in cross-border because obviously we're stuck with the correspondent banking system, which is really slow and clunky and prone to errors. So there is that. But I mean, where do we see MasterCard, Visa? They've grown just tremendously. They have the biggest moat. And the one thing that they do have going for them is that merchant base. So if you want to think about how to disrupt any smart payment disruptor, in my view, should work with people and partner with these people that have those merchant bases as opposed to trying to do it from scratch. I mean, that is a monumental effort. And I've seen, because I work with payment companies, and we've seen some that have tried to do this organically, and then we've sat there and said, why don't you go with these approaches with the partners, community? It goes back to even your first comment in crypto, what powers things? It's, play to your strengths and then capitalize on partnerships and communities where there are those moats. So I do think they'll continue to have some dominance in the ability to maintain that merchant base, but you're going to see a huge amount of pressure in terms of their commercialization model. Will merchants still be okay paying 2%, 2.5% credit card fees? I think with the ability to look for such low cost or zero cost alternatives, you're going to have to see some change.
Yeah. I mean, Peter Thiel says in his 0 to 1 book, it has to be 10x better. Otherwise, it's just not worth it,
Yes.
right? And so whatever you do has to be that. But I think you've also mentioned a number of interesting reports and researchers. Where can people go and find out about the reports and researchers and follow you with your insights? And,
Sure.
Yeah.
Just our company page, QuinlanAssociates.com. You'll see an Insights tab. Scroll freely. You don't even have to leave your email address. We don't spam you.
We'd
So
love
you
that.
download every single thing we've written over the years on a lot of juicy topics in FS, from Gen AI to risk-weighted, real-world assets, digital securities. It's all there.
Oh, awesome. And can they follow you? Are you on Twitter? Or,
I don't use Twitter, actually.
Oh, yeah?
That's my big mistake, but I am on LinkedIn. So you
Okay.
can find me on LinkedIn,
Great.
and I do post quite prolifically on there. I might ruin a few homepage experiences for people.
Well, thank you so much, Ben, for your insights. Lots of learnings of what's going on in Asia and around the world in fintech and along the DLT technologies. So thank you very much. And I definitely want to follow up and do another one, because we could go on for hours.
We could.
I could think of 500 new questions in my head on what to actually go on with. And look forward to doing this again.
We'll definitely do it again.
Yeah.
Thank you, Stefan.
Thank you.